Things are happening right now, things are changing, and it's time to pay attention to crypto because crypto is about to outperform, in my opinion, specifically Bitcoin at this part of the cycle as well. Let's go through that. I'm going to look at interest rates, I'm going to look at the macro cycle, and then I'm going to look at, specifically to Bitcoin, the ETF, which is driving this. We have a descending wedge here, which is typically a bullish pattern. You're looking for breakouts to the upside within an uptrend anyway. And this is an uptrend now, okay? So let's see the breakout and what potential targets would be for Bitcoin first, and we'll get to the macro in a little bit later. Potential breakout, you would look at something like that, 34,000. So that is a medium-term target because this is the day chart. Now, for shorter-term targets, you've still got this massive resistance level around 31, 32. You can see that here. This, for me, is the breakout that we need for, a bull market breakout, right? Once you've broken out from that, tested it a couple of times, go further along, then that is a bull market, right? So we are underneath that. It's still time to accumulate, just be consistent here, in my opinion. But you can see this is the breakout target for that bull market. And it may not come for, a few months later, right? But we have ETF news coming very soon. So if positive, obviously that's good. If they're delaying it or some negative stuff comes out, obviously we just keep under this level. But you can see this right now. This is positive. You can see we are just in an uptrend here. On the longer term, if you look down, we're going to go on the 4 hour now. You can see, you can just feel the price action, right? I put in the private Discord groups yesterday. I can feel the bid underneath BTC right now. You can feel the bid, right? Higher lows, buying coming in, breakouts, you can just feel it, right? So yes, there are going to be sell-offs. This is a volatile time for BTC, right? Because we're coming into the halving within 6 months. And so you're going to get some miners capitulating as hash rate goes through the roof. Hash rate all-time high right now. Many small and medium-sized miners are going to capitulate. They just can't afford to mine Bitcoin anymore. Maybe they're going to have to sell Bitcoin. So there's volatility in Bitcoin, but volatility is opportunity because 20-30% to the downside in a very, very strong secular trend to the upside. So that's how I see Bitcoin. I'm very positive, not just on BTC because of the ETF news, but also because of the macro cycle that's changing. Crypto as well will reflect that down the road. So we're going to get onto that in this video. If you are a trader, check out the Bybit deposit bonus, which I'll link down below. If you trade on Bybit, make a deposit. You can get up to 30K as a deposit bonus. Not available in every country though, so check the links below for more details. Very large respected institutions are now saying the ETFs are coming. So we have JP Morgan expecting within months. You have Galaxy Digital saying probably by the end of this year.
Yeah, it's going to get approved. We actually think, we're partnered with Invesco on an application. We think it happens this year in 2023.
You have BlackRock doing the rounds.
And I believe crypto will play that type of role as a flight to quality.
So it seems to be coming, and they seem to be pretty confident about that. Here's what's coming through the next part of the economic cycle, and we're just starting to get that turn. Now, the debt construct in the States is completely unsustainable at this point. 33.5 trillion in debt. It will become 50 will turn to 70, 80, 100. That's because real GDP will not match this exponential rise in debt. The only way to keep up with interest payments is to fake that productivity through money expansion and inflation. Ultimately, the currency gets hit. This is the debt construct. 6% budget deficit this year, going higher and higher. So the debt is unaffordable. And how do you pay for that debt? You have to issue more and more debt. And that is why interest rates continue to rise. People are selling treasuries for many different reasons. That's why the long end of the curve is now going higher and higher. But as interest rates rise on the long end, it constricts the economy more and more and more and more and more until you get a recession or a growth slowdown. That's what's starting to happen now on the long end. And so a growth slowdown means that the short end of the curve, 6-month ones and twos, can potentially drop in price. No money printing as yet from the Fed, but that may come in order to prevent deflation. The only thing central banks actually fear more than inflation is deflation, because if you get deflation, the debt as a percentage of GDP rockets even more. And this is not going in the right direction. We also have this, hear me out, the Fed is done and may actually have to cut rates sooner than anyone expects. The US government's torrid debt spree, $600 billion in the past month alone, has exacerbated the move in yields due to supply-demand imbalances. As inflation has been coming down, this is now overtly risking in effectively over-tightening in market condition, even if the Fed no longer raises rates. Several Fed speakers have already indicated that rising yields are doing the job for them, but the velocity of the move in yields has become so historically extreme, over-tightening may be the end result here. So in the short term, an over-tightening because of the huge debt construct, which is blowing out yields everywhere, making everything unaffordable, and a short-term slowdown in the economy, recession or slowdown. It's exactly what the Fed wanted, so they have cover to drop short-term rates down and then refinance at lower rates. It's the only way, if you are absolutely over-leveraged on your credit card, the only way is to refinance, hopefully at lower rates, and kick the can down the road further. Gold starting to sniff that some sort of yield curve control measure is inevitable. The government can't keep exponentially worsening its debt problem with the Fed deliberately increases the cost to service it. We are facing a trifecta of macro imbalances, and ultimately financial repression must be restored. So gold is starting to sniff things out, but how about Bitcoin? So this is year-to-date performance that I want to show you. If you're invested in gold, gold was actually down this year, as you can see, not a good trade. What you can see with gold is that it's starting to outperform. It's actually starting to rise in value. This is what's known as a recessionary trade, where traders are placing bets that the currency is about to get weaker than it has been. So that is a recessionary trade right here. You're also seeing the S&P 500 actually move down and the NASDAQ actually moved down. These are stocks which represent the economy, and so you would think that's probably something that might happen in a recession. What's happening to Bitcoin? Bitcoin isn't stocks. It's behaving as it usually does, which is an uncorrelated asset. It's actually rising at the same pace or in the same direction as gold. So it's a recessionary trade, a hard money trade during what the market is starting to trade this recessionary trade now. So they're starting to think maybe within 1-2 quarters, maybe 3 quarters, there might be a slowdown. Not a recession, but a slowdown, something a bit weaker. That's what people are trading. They might be wrong, but that's what they're trading. And if we take it over the 1 year, we've got Bitcoin up 53%, which has outperformed everything else. If we take it over the 5 year, you got Bitcoin up 350%, which has outperformed everything else. Bitcoin dominance continues to rise. I wrote this on my X the other day. Bitcoin dominance should continue to rise during this part of the cycle. It is the trade, and you have those specific flows and the ETF potential. It's going to be very volatile, but you can see Bitcoin dominance versus the altcoin market rising, and it should continue because the narrative and the flows should be coming into Bitcoin first, as it usually does. Bitcoin halving, the turn in the cycle, that narrative is there. So what do I mean by Bitcoin dominance? It's Bitcoin versus the entire altcoin market. There will be altcoins that outperform because they're specifically doing something very good. But what I'm talking about is Bitcoin versus the massive long tail of projects that just have to die because they are just not competitive. They're a bad idea, right? And they have huge amounts of inflation left. The teams are dumping tokens continually, trying to, pay for development. Talking about all these coins that just, they've got no future, right? Some will outperform, but this vast majority, 100 million market cap, 100 million market cap, these should be 10 million market cap or zero for a lot of these projects. So that is the long tail that should underperform versus BTC for sure. There will be some specifics that outperform as always. If you do have the crypto course already, just make sure you watch these videos here as well, which is my investment strategy for the next 12 months, my macro update, which I went through this in August. So it's really important, if you haven't watched those yet, watch those if you are in the course. If you haven't got it, I'll link it below. The main risk here is that even though the economy does slow a little bit, inflation doesn't come down enough. And so the Fed has to just keep short-term rates higher and the longer-term rates higher, which is just going to carry on. If inflation doesn't come down or they don't think it's coming down enough, that's an issue. And so that could push out, a potential recession, which, the longer you wait, potentially the worse it gets, which could actually be pretty bearish short term if something kind of really, really terrible happens with that inflection with the recession. So there are always risks here. Bitcoin is strong in this environment though, and so I think it's generally very positive. And anything under this 32 line for me, is decent to get into because the bull market's clearly going to be above that when it comes. Obviously, when we don't know, but it's fairly certain at this point that Bitcoin is, a growing asset, right? So that's why we're all here anyway. If you're a trader, 30,000 deposit bonus on Bybit. You can check that and the other links down in the description as well. I'm James, this Money's EG. Cheers for watching, and I'll see you in the next one.